Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for June 10, 2020. Today we're taking a look at the AUDUSD, the Australian, versus the US dollar for today's trade analysis. Looking at the left-hand side, the daily time frame for the Australian dollar, clearly it's been an uptrend. There has been no real significant pullback for quite some time now here for the Australian dollar. Could come at any time, but at least right now the uptrend is still intact. So one of the things we talk about in the live trade room is the difficulty in buying in the direction of the trend at the highest high. The difficulty of buying at the highest point that the trend has been at. And so what we typically want to see is some sort of pullback, a dip, settling into support before we buy it again. Gives us lower risk and higher reward opportunity. Doesn't mean we can't buy at the high, it just means it's more difficult and we may have a little bit of extended risk. So we try to find the best opportunities in the direction of the trend, keeping in mind that at some point the trend may change, but right now there doesn't seem to be any expectation of that. The highest point of the current trend up there near the 0.703040 level, the green zone at the very top of the chart, currently sitting right around or just above the 0.7000 level, 7005 or so. Is the top of the pink shaded area, and the yellow zone down near 6970. And all I'm looking at is what you see up there at the top of the trend right up here. And let's go ahead and make that a black box like they are down there at the bottom. And so we're looking at it at the very top of the trend up here at this black box. So I think there's room to go, definitely room to go before it reaches the green zone and, of course, higher levels, which we'll look at later in the trade room. One of the things we've been studying here is the volume indicator on the right-hand side provided by Hawkeye Volume. You can see coming down the yellow zone at the bottom, the pink zone. We've been using that pink zone over the past couple of days as resistance. You can see that pink zone, resistance, and now what's interesting is that we're just above that pink zone. Over the past 24 hours, resistance into that pink zone, and now we're above that pink zone. So the idea is we could be looking for the market to make a little bit of a dip back down to that pink zone, find support near 7,000 before we buy again and look for it to rally back up to the green zone or even higher in the direction of the trend. So the best way to find our lowest risk is to let it settle down on top of what was resistance pink zone to become support. So then our stop loss clearly is then going to be under the pink zone. That way we can limit the impact if the market does decide to turn around and go back in the other direction. Clearly, that's the best opportunity for the day on the Australian dollar. There's no reason to sell it. One thing I will note, though, is we have a lot of news for the U.S. today. CPI data coming up, FOMC later today. A lot of news for the day today. Could change everything we just talked about, but at least right now, if you're going to look for a long for the Australian dollar, let it sit down, closest possible to 7,000. And then target back to the 70, 30, 40 level, the green zone, for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.